The chains didn't disappear. They just became invisible. You check it when you rent an apartment. You need it to buy a car. Banks pull it before approving a loan. Employers scan it before offering you a job. Insurance companies use it to decide what you pay. A 3-digit number, somewhere between 300 and 850. And it controls almost everything you are allowed to do in this country. You were never told who built this system. You were never asked if you wanted to participate. One day, you just woke up inside it. And now you are being judged every single day by a score you cannot see being calculated by companies you have never met using rules that are never fully explained. This is not credit. This is obedience training. Let me take you back, because this trap is older than you think. The Romans had a word for people who could not pay their debts, nexum. It meant bondage. If you borrowed money and could not repay it, you did not just lose your property. You lost your body. You became the property of your creditor. You worked in their fields. You slept in their barns. You had no rights. The law said you were bound until the debt was satisfied. And the interest kept growing. Most never escaped. They died in servitude. Their children inherited the debt. The system was not designed to help people borrow. It was designed to trap them. Medieval Europe refined the model. They called it serfdom. The lord owned the land. The peasant worked it. But here is the trick. The peasant could never own what he grew. He paid rent to live on the land. He paid taxes on his harvest. He paid fees to use the mill and the oven. He paid the church a tithe. And when the year ended, he had just enough to survive until the next harvest. He could not save. He could not leave. If he tried to flee, he was hunted down and punished. The system was not about farming. It was about control. Keep them alive. Keep them working. Keep them too poor to resist. This brings us to stage 1, the lure. Every trap starts with a promise. You are told that credit is freedom, that borrowing is smart, that debt is a tool for building wealth. They say you need a credit card to establish a history. You need a car loan to prove you can make payments. You need a mortgage to stop throwing money away on rent. They make it sound like opportunity, but here is what they do not tell you. The moment you take that first loan, you enter a system of permanent evaluation. You are no longer a citizen. You are a risk profile. The modern credit score was born in 1989. A company called Fair Isaac Corporation created the FICO score. They sold it to banks as a way to predict who would repay loans. But prediction was never the goal. Control was. Before, FICO lenders had to meet you. They had to look at your circumstances. They had to make a human decision. FICO removed the human. It reduced your entire financial life to an algorithm. And that algorithm has one purpose: to decide whether you are obedient enough to be trusted with money. Stage 2, the dependency. You are told to use credit responsibly. Pay your bills on time. Keep your balances low. Do not close old accounts. Do not open too many new ones. Every action you take is monitored. Every purchase you make is recorded. The system tracks how much you owe, how much you earn, how much you spend. It tracks where you live, where you work, how often you move, and it builds a file on you. A file you are not allowed to fully see, a file that follows you everywhere. But here is the part they do not teach you in school. The score is not just about repayment, it is about behavior. If you pay off your credit card every month, you are a bad customer. You are not generating interest, you are not profitable. The system wants you to carry a balance, not too much or you look risky, but enough to keep paying interest forever. The ideal customer is someone who never misses a payment but never pays off the debt. Someone who stays in the trap. Stage 3 arrives when you realize you cannot escape. You need the score to rent an apartment. Landlords will not even look at you without it. You need it to finance a car. Dealerships will not negotiate unless your score is high enough. You need it to get a mortgage. Banks will not lend unless you have spent years proving you are worthy. And worthiness is not measured by your income or your savings. It is measured by how much debt you have successfully carried. This is where the system turns deadly. You are punished for not having debt. If you live within your means and avoid borrowing, your score stays low. The algorithm sees you as untested, unproven, risky. So you are forced to borrow money you do not need just to prove you can pay it back. You are forced to pay interest just to earn the right to pay more interest later. The trap is perfect. You cannot build credit without debt, and you cannot escape debt without destroying your credit. Medieval peasants had the same problem. They could not leave the land because they owed rent. They could not stop working because they owed taxes. They could not resist because resistance meant starvation. The Lord did not need chains. He just needed control of the food supply. Today, the system does not need chains either. It just needs control of your access to housing and transportation and employment. The tools have changed. The trap has not. Stage 4 is the realization that the score is not objective. It is designed to fluctuate. If you apply for a loan, your score drops. If you close an account, your score drops. If you pay off a loan, your score drops. The system punishes you for trying to be free. It rewards you for staying in debt. And the rules change without warning. One day your score is 720. The next day it is 680. You did nothing wrong. The algorithm just decided you are riskier now. And here is the cruelest part. You do not control the data. The 3 credit bureaus, Equifax, Experian, and TransUnion, collect information about you from banks and lenders and credit card companies. But they also collect information from data brokers and public records and court filings. And they make mistakes, constantly. A study found that 1 in 5 Americans has an error on their credit report. Wrong accounts, wrong balances, wrong late payments. And fixing those errors is nearly impossible. You have to prove the mistake, you have to write letters, you have to wait months. And while you wait, your score stays low. Your applications get denied, your life stays on hold. Once you sign that paper, the clock starts ticking against you. Every month you owe a payment. Every month interest accrues. Every month you are one missed paycheck away from disaster. And if you slip once, the punishment is brutal. A single late payment can drop your score by 100 points. It stays on your report for 7 years. 7 years of higher interest rates. 7 years of denied applications. 7 years of being marked as untrustworthy. The system does not forgive. It extracts. Stage 5 is the moment you realize the score is not just financial. It is social. Employers check your credit before hiring you. They say it shows responsibility. But what it really shows is whether you are desperate. Someone with bad credit is more likely to stay in a low-paying job, more likely to accept bad conditions, more likely to obey. The score becomes a tool for filtering out people who might resist, people who might demand more, people who might leave. Insurance companies use your credit score to set your rates. They claim it predicts risk. But the data does not support that. What it actually does is punish poor people. If you have bad credit, you pay more for car insurance, you pay more for home insurance, you pay more for everything, not because you are a worse driver or a worse homeowner, but because the system has decided you are worth less, and the punishment compounds. Higher insurance rates mean less money to pay bills. Less money to pay bills means more late payments. More late payments mean a lower score. A lower score means higher rates. The spiral never stops. This is not a conspiracy. This is a business model. The credit scoring system generates billions of dollars in profit every year. Fair Isaac Corporation makes money every time your score is checked. The credit bureaus make money selling your data to lenders and employers and insurers. The banks make money charging you higher interest rates based on your score. Everyone profits except you. You are not the customer. You are the product. Stage 6 is the final trap. You are told that if you just work hard enough, you can improve your score. You can pay down your debts. You can build a perfect history. You can reach 850. But even if you do, the system still owns you because the score is not a destination. It is a leash. The moment you have a high score, you are approved for more credit. More credit means more debt. More debt means more payments. More payments mean more chances to slip. And if you slip, the cycle starts over. The numbers have changed, but the leash is exactly the same length. A medieval serf owed the Lord a percentage of his harvest. A modern worker owes the bank a percentage of his paycheck. The serf could not leave without permission. The worker cannot move without a good credit score. The serf worked the same land his entire life. The worker makes the same payments his entire life. Freedom was an illusion then. It is an illusion now. And here is what they will never admit. The system needs you to fail. It needs a permanent underclass of people with bad credit, because those people pay the highest interest rates. Those people generate the most profit. If everyone had perfect credit, the system would collapse. So it is designed to keep a certain percentage of the population trapped. Not everyone, just enough. Just enough to keep the machine running. You were born into this. You had no choice. By the time you were old enough to understand how it worked, you were already being scored. Your parents opened accounts in your name. Your student loans started reporting before you graduated. Your first credit card came with a promise of freedom and a trap you could not see. And now you are here, checking your score every month, worrying about every purchase, afraid to take risks because risks might hurt the number. But here is the part they do not want you to understand. The score is not real. It is a social construct, a tool of control disguised as financial responsibility. And the moment you realize that you can start to break free, not by playing the game better, but by refusing to play at all, live below your means, save cash, avoid debt. Yes, your score will suffer. Yes, you will be locked out of certain opportunities, but you will also be free. Free from the monthly payments, free from the constant evaluation, free from the fear. The Romans eventually banned debt bondage. It took a revolt. The serfs eventually won their freedom. It took centuries of resistance. The credit score system will not fall easily either. But it starts with awareness. It starts with refusing to accept the lie that a 3-digit number defines your worth. It starts with understanding that this is not about helping you borrow. It is about keeping you trapped. If this opened your eyes to the cage you are living in, subscribe. Because in the next video, we dismantle the rest of the illusion.